Hi, I'm Russ Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, we're lucky enough to be joined by Strategas head of macro and technical research, Chris Verrone, to talk all things markets. Chris, how are you doing today?
I'm doing great. Thanks for having me.
Yeah, thanks for joining us. I want to start with something that you've been pointing out for a couple weeks now, but I think might still be off the radar for most investors. Amid the talk about the consumer, amid the AI hype, it's been energy that has been market leadership. And you've been pointing that out consistently. I'd love if you could talk a little bit more about what's going on in that sector and how it looks relative to the rest of the market.
Yeah, Ross, it's a great point. I think a very important call for us. And it really speaks to how markets have an affinity for paradox. And I think the paradox here is go back to early July, July 12th, I think it was. We print a 3%, very benign CPI number. It really kind of emboldened the soft landing or the disinflationary talks out there. But the irony is, since then, all that's happened is interest rates have gone up and energy's been the leadership of this market. Since that July 12th CPI print, energy's outperformed every single sector by at least 800 basis points. So when you look at how the market interprets news, I actually think that's more important than what the news actually is. And I think the move to these energy stocks here, both up and down the cap scale, domestically and globally, I think really confirms the idea that this sector retains its credentials as a leader. We've been using this language. Energy is still carrying the flag of leadership. I think that's right. It's broad. There's not another sector that is even remotely as robust under the surface as energy is right now. About 95% of the sector above the 200-day moving average. The next closest sector has about 70% of issues above the 200. So very broad, very strong, and an affinity towards paradox this market seems to have.
Yeah, and you mentioned since that CPI print that rates have been up. You know, the dollar has been up. I think that surprised a lot of people. What is the more important thing of the two, and what are you seeing, or what does it mean for the market going into the end of the year that those things have rallied in the face of moderating inflation and
Yeah.
a cooling economy?
Well, Ross, I don't think it's just since July that rates are up. I mean, think about the trajectory of the last year. It was a year ago where CPI is around 9. So we've made a lot of progress, 9 to 3 on CPI. And what did bond yields do? They went from 350 to 4.25. Right? So it just, again, emphasizes how a market responds to information is what's more important than the information itself. And I think there's a couple things we can learn from this episode with rates and inflation. I think number one, most people just forget that the normal state of affairs is actually a real interest rate. So bond yields in excess of CPI. We went back and looked over the last 70 years. 10-year yields have traded on average about 200 basis points above where headline CPI is. So this idea that 3% CPI and 5% 10-year yields is out of bounds is actually wrong historically. That would be more normal than, say, 3% CPI and 150 10-year yields. That's the historical outlier. So I'm kind of comfortable with the idea that even as inflation moderates or kind of gets stuck somewhere in this 3 to 4% zone, you can still see nominal 10-year yields in excess of that.
Yeah, that's a really great point, and I think important for anyone who's expecting yields to revert back to the pre-COVID 0% era. I think that that ship may have sailed. I want to end something that you all have written, and I really like just as a concept, is the idea of where do the headlines not match the price action, and how insightful it can be to find those pockets in the market. You've talked about a few areas. What is the one right now that stands out to you in that framework?
Well, I think the irony is we kind of just talked about two of them, right? The disinflationary headlines, which with energy leadings, kind of seems a bit out of step. We've seen inflation go from 9 to 3, yet rates have gone up. That seems out of step. So kind of in that spirit of where else do we see maybe price action behaving a little bit differently than the headlines would suggest. And I have to admit, this one's a little bit more of a stretch right now, but I think there's value in having an imagination or keeping an open mind. But I would say it's China here. I mean, there's no doubt that the Chinese headlines have been about as bearish or as negative as I can remember, certainly since 2015, 2016, perhaps since 2008. But I find it curious that things like Chinese bond yields have stopped going down. I find it curious that copper has not broken lower. I find it curious that iron ore has continued to go up. and oil prices have gone up. So there seems to be at least this little hint coming from the market that it might be willing to anticipate some type of a turn in the data. And that's kind of really our job, to understand when the market begins to anticipate a shift. I think this is very circumstantial right now, but in the spirit of being thoughtful, or maybe even being a little provocative, I do want to keep an open mind that the market might be beginning to anticipate some improvement out of China. It's early, but it's on our minds.
Well, it's your all's job. You do it better than anybody else out there. We're glad to have you on the team. Chris, thank you again for the time today, and have a great one.
Ross, thank you.